The stock market made a dramatic comeback yesterday as investors stepped in to buy tech shares following a sharp sell-off earlier in the day. The Dow closed in the green after an earlier 1,000-point loss. Investors began Monday's session by dumping tech shares, fearing the Feds would soon aggressively toughen policy. This following a brutal week on Wall Street that saw its worst ever start to a year.
And while tech companies, including Facebook's Meta, Amazon, and Microsoft all closed higher by the end of the day, Moderna, Netflix, Nvidia, and Tesla were dubbed the biggest losers in the market. Despite Wall Street's miracle rebound yesterday, the S&P 500 is still down 7.5% this month. Joining us now to discuss is Jaime Rogozinski, founder of Wall Street Bets. Welcome, Jaime.
Hi, thank you for having me.
Help us understand what happened to the market yesterday, because a lot of folks are really lamenting the valley, but it ended up ending all okay. Was it all a bunch of hand-wringing for nothing?
I spoke to my dad yesterday, who's a world-renowned economist, and he goes, I think the stock market went down because a dog was barking, and then the stock went back up because a cat left the house, right? It's just impossible to tell exactly what happened. It's very evident that we're having some volatility. There's some major change. There's a tremendous amount of volume and outflows from ETFs. There's just a volatility. We've had 14 years of a straight bull market, so we're bound to have some moments of volatility.
Do you think that this is? I'm actually seeing smoke, and I actually think there's a fire in the economy, and that we're actually headed for a pretty serious crash. Do you think that this is indicative of that, or do you think that, because a lot of people like myself say, hey, listen, this inflation that we were seeing, because we know that crypto is tied to the stock market, and we're seeing, some worrying signs. Do you think that we are headed towards, that recession or even depression because of this high inflation? Of course, Powell's going to have to come out, and I know in these next today and tomorrow he's going to be talking and trying to calm and ease some fears, but I don't know. I actually don't see this as like a dog barking or a cat leaving a house. I see this as the house is on fire and we need to do something about it.
Look, the fact is, one of the few things that is predictable about the economy is the cycles that we go through. There's cycles of bull and there's cycles of bear. Like there's moments of recessions. There's been a moment of depression. There's been moments of really great economic output. So we know it's going to happen eventually. We know that we've had a very good run, like I said, for over a decade at this point. So at some point, yes, the markets and the economy are going to slow down a little bit. The one thing that I've also learned during the past 14 or so years is if it's not this, which is inflation and we printed too much money and whatever, it's coronavirus, because that's going to stop everything. But we recovered really quickly from that. Or before that, it was China, or at least 5 times that I can count it was China, or some war in Ukraine. Now we're on the second round of that. Like there's always reasons to fear, right? But I do know that if every time that I get worried because the big one is coming, that I decide to short or sell, over the past 14 years, I would have missed out on a lot of money. So whenever that time comes, it'll come. It's entirely possible. It's more probable that we're getting closer to that moment, given the length of time that has passed. But I would hesitate to actually take action at this point.
Well, and if people don't follow your advice, right, if people behave as if there is a fire, then it can almost create that condition, right? If everybody panics, if everybody behaves like that.
Well, everybody that panicked yesterday ended up losing out like on a 5% recovery, right? Mm-hmm. So at the worst point yesterday, the markets were down, 3%. If people just gave up and sold, they would have seen the market go back up. So if people are actually investing in the stock market, leave your money in there. At the end of the day, 10 years from now, 5 years, 15 years from now, whenever it is that you're going to use that money, you won't remember this particular phase. But if you're gambling, then it's not a big deal, because then you can pretty much bet whether the stock's going to go up or down. And there's 2 buttons on your broker. Say, I think today it's down, and you bet it and you hope for the best.
Well, cryptocurrencies.
I think it's going to go.
Go ahead, Kim.
Sorry, go ahead, Ron. I think it's going to keep going further, and so I think right now the only thing to do is to, like you said, kind of play the long game, right? Whereas you just don't pay attention to the dips right now, because even though you buy at the dip, of course, I know I was really tempted to cash out some of my crypto and buy other crypto, maybe trade around some stuff, but even though you could, it's just I think the dip is going to come even further. It's going to go down even lower this year. I mean, I think we're headed for it this year. But again, being a Wall Street guy, I mean, look, it's either the economy or it's Wall Street. It's one or the other. Either he's going to raise interest rates, and that's not going to be so great for Wall Street, or he's going to keep them down and continue printing money in quantitative easing, which is going to be, keeping Wall Street investors happy. So I guess we'll see which way it goes, right?
Yeah, well, absolutely. Look, the higher that it goes, the farther that it can fall. And the faster that it goes up, the faster that it goes down. We know that for a fact. So, yes, we will either rip the Band-Aid off and raise the interest rates and just pretty much let prices go back to normal, or we'll continue just inflating the stock market price and we'll save this, kick the can down the road and wait for another day.
Well, so cryptocurrencies have also been moving in tandem with stocks. Bitcoin climbed back into positive territory after falling below $33,000 to a new low. The decline correlates to the selling seen in higher risk assets like tech stocks as investors prepare for high interest rates and stricter policy. About $130 billion was wiped off crypto markets in 24 hours, trading at their lowest levels since July. And look, I know people who are very skeptical of crypto will, I guess, take this as a haha, we were right. But is that the right message to take away?
I mean, here's the one thing, like they've done studies on Bitcoin specifically and with the S&P, and they've found that there is some correlation. So when the S&P, some correlation, I say that carefully, but when the S&P goes up, you tend to see the Bitcoin go up. And when the S&P goes down, you tend to see Bitcoin go down on a bigger scale. And I believe that's because there's now more institutional adoption of it. And there's more institutional money. And, it's going to start behaving the rest of the way the rest of institutions end up behaving. That's the first thing. The second thing is all the other cryptocurrencies are very highly correlated with Bitcoin. That's also a known fact. So pretty much what you can deduce from that is if the S&P is down, there is a higher likelihood that the entire crypto market goes down. I think that I think we're still relatively early in the crypto stage to the point where there's such a high correlation, but I'm starting to see evidence that correlation is going to start diverging so that you can actually have more of a diversified portfolio. Just like you have the 60-40, now they're calling it the 80-20, the risk parity, where you have bonds and stocks. I believe there's going to start a maturity process of the cryptocurrencies so that you can include that with your balanced portfolio.
It's interesting because we're seeing some nations adopt crypto as a form of currency, but then we're seeing other nations like Russia and China trying to limit it. And so I'm curious, do you think that there's going to be more nations either adopting or turning their back on crypto? Which way do you think it's going to go?
All nations will have to make that decision, right? So you have... There's no way you can make cryptocurrencies go away. That's already stood the test of time, even if China has tried to kick it out, I don't know how many times already. So the fact is that this thing is here to stay. So countries have to decide where on the spectrum. Are they going to go the China route? And China, by the way, didn't just kick out Bitcoin. They wanted to instill their own, the digital yuan. Mm-hmm. And of course, El Salvador, which decided to adopt it as its legal tender. I don't think countries need to pick such an extreme approach. I believe that they just need to figure out how to regulate it and tax it and incorporate it into their economy so that it aligns with the goals of that particular country. But every country is going to have to take a look at these assets or currencies or whatever, however they're classified, and take a stance.
Yeah, I think it'll be really interesting to see which way kind of our regulators or our political climate lean. I was reading there was a report yesterday, for instance, wondering how Elizabeth Warren was going to start thinking about crypto because, she's so anti-big banks and that kind of thing. And to some extent, crypto can be, an alternative to the traditional financial system, but then it is money and will have it has its own issues from the standpoint of if you're like a progressive person or if you're someone who doesn't like the financial system. And then there's going to be I think probably the concerns about crime or how it can, be used to facilitate crime are probably going to be something that Congress just gets very interested in the future.
I mean, the issue about the money being, the digital currencies being used for crime, that same problem exists with cash, right? Yeah. That's how drugs are dealt. And so I
agree with you. I think our congressional people are going to wrongly start saying that. No, I don't think it's a problem. I think Congress will think it's a problem.
China had the right approach, right? Like one of the merits of blockchain is transparency, meaning like pretty much everything that takes place, much more so than cash. So the quicker the government realizes that if they do want to crack down on illicit activity, it is a lot easier to do that using blockchain. Of course, there's ways to circumvent on both directions, but like it's always a game of cat and mouse. I believe that the government will have the upper hand with cracking down on illicit use of currencies if they're in the digital form. But at the end of the day, every single institution is going to be up against this. Prior to me using cryptocurrencies, I would listen to people saying, well, once you have Bitcoin, you won't want to use your bank anymore. And I would look at that like, oh, you're just an activist, whatever. Now I've gotten into crypto, and I don't say that because I don't want to sound like those lunatics, but I don't use banks anymore. Like, I don't see the purpose of them. It's so much harder to transact and to do. I live in Mexico, and so moving money back and forth, like, So I secretly stopped using banks, but not because I'm an activist or I want to take down the Fed. It's just better.
Yeah, no.
Not so secret anymore. You just told everybody.
Well, yeah. Jaime Rogozinski, thank you so much for joining us.
Thank you very much for having me.
Tomorrow on Rising, labor reporter Kim Kelly joins us to discuss the latest on the Teamsters strike shaking up Seattle.
And Matt Stoller will be here to weigh in on the big tech antitrust bill that just cleared the Senate Judiciary Committee. I had a great time filling in this week. Thank you so much for having me. It was a real pleasure. You can catch me if you're interested on Bad Faith Podcast, and be sure to like, share, and subscribe to this show so you never miss a video.
Bye, everybody.
Bye-bye.